Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Volatility has made its way back into the market, and this is what investors need to know as the focus shifts to the U.S. elections, particularly the national election. Joining me to discuss is Caleb Silver, editor-in-chief at Investopedia. Caleb, as always, it's great to see you. Welcome back to Trade Talks.
Thanks for having me. Good to be here. And the election is on our readers' minds for sure, and a lot of investors as well.
Well, Caleb, Investopedia has surveyed its readers every 6 weeks since the middle of March to gauge their sentiment and how they have been adjusting their portfolios amid the pandemic. And the most recent survey shows a major shift in anxiety for the first time. What's on investors' minds?
Right. For the first time, the election is the number one concern on our readers' minds. And there's been plenty to be concerned about in 2020. Obviously, the election is coming very soon. There's been a lot of political activity that's affecting potentially the economy. So investors are very concerned about more so than COVID, but COVID is a close second. They're also worried about rising unemployment and other things. But this anxiety around the election, not necessarily who will be president, because they don't really have an opinion on that. They expect more volatility because of it. And if you've seen what's happened in the last couple of weeks, they're not wrong.
Do millennials approach it a little bit differently than other older investors?
Absolutely. And our older investors have been a lot more cautious with their portfolios in the last several weeks. They've taken some money off the table. They've had some big gains since late March. They've been a little bit more cautious, putting more money into treasuries, putting more money into bonds. Millennials have been getting more aggressive on the stocks that have been winning for them. And these are the big names that we all know, the FANG stocks, the FANGman stocks with NVIDIA, of course, and Netflix. So they've been leaning more into those while our older investors are paring back a little bit because they've seen volatility like this before around elections and certainly coming out of the last recession where we saw a number of corrections in 2009, 2010.
So it's interesting. They're actually making strategy changes going into this.
Yeah, and our older investors have been around for a while. They've seen a few cycles. So the strategy changes they told us they're making by and large are taking some profits, taking a little bit off the table, not incommensurate with what we're seeing with market activity in general, especially around the technology stocks, but they're backing off a little bit and waiting for this one to pass, not eliminating their positions completely, paring back, waiting and seeing what's going to happen. And younger investors are a little bit more aggressive than that, leaning more into what has been a very hot market for the last several months, absent the last couple of weeks.
So, Caleb, here's $1 million question, of course. What's an investor supposed to do at this time? We've been through elections before, but certainly nothing nearly as what's expected to be chaotic for what we see in 2020. It's just the year that keeps on giving on every front.
Sure. Well, if you sold out of your positions before the 2016 election because many people thought that the economy would go into a recession and we'd have a bear market because of Trump, you lost a lot of money and a lot of opportunity. If you did it 4 years prior with Obama being reelected, you lost a lot of money. So staying the course with a balanced portfolio that you can make sure fits your risk parameters is the way to go. And let me just give you a little bit of perspective on this. If you were to have held the 10-year, the S&P 500 for 10 years, the annualized return is about 8%. For 20 years, it's about 9%. So 8 or 9% return is not bad given the chaos. You got to stick with your strategy, but make sure you're not overly exposed. And it's easy to do that by dollar cost averaging in, setting some limits, setting some stop losses on some of your positions. Just have a plan.
Always a voice of reason, Caleb. Thanks so much for joining us on Trade Talks.
Thanks for having me.
Thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.